It's here. We are redefining what it means to sit at the girls' table. Hi, everybody. Welcome back to Girls Table, a podcast where women founders, creators, and investors share their stories. Today, I'm joined by Nichole Wischoff, who spent the last 6 years working at companies like Blend, One Finance, and Built Technologies. She scaled and built multiple new business initiatives, M&A, and raised over $350 million. She was an early investor in companies such as Vespa, Nuvo, Loop, and others. And after investing out of a $5 million fund part-time, Wischoff went off on her own as a solo GP to invest in fintech and B2B startups. And honestly, the number of solo capitalists is on the rise, but there is still a huge gender imbalance, particularly in fintech. And I'm also seeing a tremendous amount in the Web3 space, which is why I am so excited to share Nichole's story today. So Nichole, thanks so much for joining the Girls Table. How are you doing today?
Of course, I'm wonderful. I am thrilled to be here. Thank you for having me.
Of course. And the way that I've been doing it these past few episodes is I really just go ahead and ask 10 questions, one-word answers. So I get to know you, the listeners get to know you, and then we'll really, after that, go ahead and jump into your story today. So sound good?
Yes, perfect. Let's do it.
Okay, awesome. So who is the biggest inspiration in your life?
I was giving this a lot of thought. Candidly, my husband, which I realize is like a little mushy, and that's more so on the personal side and professional. Like there's plenty of people that I like certainly idolize in venture and across the board. I think I've been lucky enough to be now married to someone who is everything I'm not, great at all the things I'm not, like more patient, more disciplined. So I definitely say him.
I got to meet him too because of technology difficulties.
So you saved the day for the podcast. So
yeah. One adjective you would use to describe yourself.
Authentic, like extremely authentic. Feedback I get a lot from others as well.
What is the best book you've ever read?
Oh, gosh, it might seem a little dry to folks, but I love just the overall thesis. A book called Strangers to Ourselves, which is written about like basically our subconscious and how most of what we do in our lives we don't realize we're doing, which I thought was really interesting.
Ooh, I might have to get that. I've been really into reading in Audible books lately. So coffee or tea?
Coffee for sure, every day, 5 times a day.
Okay, you're my type of person. Me too. Where do you want to go more than any other place in the world?
I can't believe I haven't been there because I've lived in Europe a few times, but Switzerland, like I would love to go. I love being outside, and I've just never made my way there, and it's been top of my list for a long time.
Ooh, I've never been either, but I would love to go too. What is your go-to pastime?
Baking. Like I used to pay for college and like through high school, I just self-taught, like I was just self-taught and learned how to bake. And so I'm like, I don't know. I was able to be an assistant to a pastry chef and learn how to make more complex things like wedding cakes, but it's my favorite thing in the world. Weekends, they all take 5 hours and I could do it all the time.
What time do you usually wake up in the morning?
It was 7 a.m. and now that I have a puppy, it is 6. So 6 is the new time.
Early. What is your hidden talent?
Super random. I speak Dutch, which I don't know if we'd call it a talent. It's mostly useless because no one speaks it, but I lived in Belgium for a year and became fluent.
Oh, wow. I'm getting off the questions for a second. Did you move to Belgium for fun or for work?
I went as an exchange student through Rotary, if you're familiar, and I was an exchange student for a year between high school and college in the Flemish part. So it was sort of mandatory that I learn the language.
Oh, awesome. What is one thing you do almost every day that's helped you be the best version of yourself?
I work out a lot. I used to run like 80 miles a week for years and do marathons, and my body cannot do that anymore. So there's like a sort of CrossFit-y gym, but I go almost every day, like an hour, my favorite part of my day, like the best thing ever. And I have to work out.
Yeah, I feel that too. I do Pilates, though. I'm not like a HIIT workout.
It's
And
really
then,
hard.
yeah, if you could do any career, what would it be?
Gosh, I really do love this one. Like, so hopefully I'm good at it and I'm in it for multiple decades. But I would own a bakery and be a baker and live in the kitchen if I could, in a heartbeat. If it paid the bills, I would do it.
I love that. Okay, now I really want to get into it. So let's go ahead and get started. And just to start off, if you're not following Nichole on Twitter, you definitely should because her tweets are amazing. That's actually how we met, and I love them. So we'll give you all of her contact information in the details. But when did you start angel investing and what really got you into it?
Yeah, so I come from the operating side and have worked in and across B2B and consumer, sort of fintech and SaaS for the last 7 years. And so about 2 years ago, a lot of my friends were leaving to start companies, and I reserved a pool of capital of my own to angel invest. And certainly thought it would be a lot harder than it was, and ended up deploying it. I think, word travels in this industry. It's really small. So when folks caught wind that I was angel investing, I ended up running out of money pretty quickly on the angel front about 2 years ago.
Awesome. So now, did your parents get into it? Did your close friends? Like, what really got you into angel investing even and venture capital?
Definitely don't come from a background of venture capital. I grew up super poor, public housing, one of seven, one of two to finish high school, and the only one to go to college. So I certainly don't have a background in this, and the seed wasn't planted until a few years ago. I really love early stage. I have been at companies from early stage, one through an IPO, one through a big acquisition this year, and a third will definitely IPO, was there early as well. And I love the chaotic, ambiguous, crazy times that are when you're like from the first employee to about, 200. And that's my sweet spot. And angel investing was an amazing way for me to stay there, right? Like I've only worked for CEO founders at startups and try to help them execute on their vision, and being able to angel invest and do that for multiple founders at the same time was like a very natural fit for me.
Awesome. And then when you made those first angel investments, how were you able to do that? Were you following different syndicates? Did you invest in different funds?
No, directly through my network. I love people. I try to be everywhere I can be and take every call. And it's like the best part of just this job actually in venture now that I get to do this all the time. And so a lot of these founders, sort of word of mouth, like one of my best friends started a company, which was my first check. He let his friends know that or me know when his friends were raising and said they should meet me. So a lot of it was organic, sort of this like flywheel and referrals and all of that. So never a syndicate, never through other people or other vehicles. It was always, directly.
Awesome. And then what initially or after a while led you to transition full-time into VC from working in fintech? And did you ever consider just continuing to do it part-time, or was it just too much time on your hands?
Yeah, so the first fund was a bit accidental. A partner that was on the board of one of my companies gave me a call last year and said, Nichole, the companies you were early at are doing amazing and your angel investments are great. You're a great picker, it seems like. We'd like to give you cash to raise your first fund. You can still operate, but would you consider it? And so I called everyone I knew, like other VCs, and said, is this a crazy idea? How do I what is a fund? Like, how do I do this? And then pretty quickly ended up with 5 million committed and was offered over 10, but capped it largely because one, I had no idea what I was doing. And two, I was still had a full-time job. So it was accidental. And I knew from the minute that I realized that was a luxury, and I think also a sign of the times last year. And so I knew from the minute I raised the fund and started deploying bigger checks and spending time with founders that that's what I wanted to do. I think every company on the operating side I always left to go back early again. So I never left because I didn't love the company. I always left because I loved the earlier crazy days where like we didn't have an insane board and huge exec team and things were slower. And so it was natural. It was like, great, I get to do the fun stuff at scale as a full-time job working with early stage companies. And I knew it. I just knew it. I was like, this was so serendipitous, like totally what I need to be doing. And kind of fell into it from someone else asking me to raise a fund.
And what is your favorite part of the job today? Like, what do you absolutely love about venture?
Look, honestly, and I don't know that I expected this as much on the VC side, but I love the community, like, and all the connections I get to make. Like, I'm like a master networker in my life. Like, I connect people personally, like all my friends. I want them to be best friends. And venture, all of this is relationships. I think also being smart enough and really curious, by the way, like I get to satisfy my like insatiable curiosity. I've been the most curious person since I was like a tiny kid. And so venture really complements like everything I want to learn and understand and dig into. And separately, like in venture, you actually, maybe not when you're trying to win a deal, but like it's very collaborative, like with firms that might want to mark up your deal or people that might want to bring you into one. So I definitely appreciate how communal the venture relationships are, and obviously equally with founders, I get to hang out with the smartest people all day and build amazing things. So a combination of those things.
And I just want to take a step back for the people who aren't so intertwined with venture capital. What's your easiest way to explain what you do every day?
It's funny, I have a lot of conversations with growth stage investors, and they're like, we're just capital allocators. We're just capital allocators. There's no fancy way of saying that. And I'd say I agree with that, right? Like, you're finding the best people to put money in to put up returns. Like, you normally will have LPs or limited partners that are investing and betting on you to make them a lot of money. So hopefully they more than double, triple, 5x the money they put in trusting you. So we're capital allocators.
I love that. So now what is your fund's thesis?
So I focus on specifically pre-seed and seed stage companies in the US, largely in B2B. I'll do a tiny bit of consumer. And I believe there is a larger flywheel effect on the B2B front coming that has to do with vertical SaaS, embedded financial services, and marketplaces. And I think within all of that, and that can be that could be healthcare, that can be construction, that can be across industries. But I think that the infrastructure and where the market is now now that we have, B2B checkout opportunities, especially companies like Balance doing invoicing, there's this amazing opportunity to bring more of these massive, like construction's a $13 trillion industry online. And so how do we complement those with also AI/ML plays to speed up a lot of the automation around, hey, that's a pay stub, hey, that's a W-2, like let's auto approve consumers for a mortgage or different use cases. So this sort of flywheel effect in the vertical SaaS, pure B2B SaaS, could do fintech all day. That's my background. And also the kind of infrastructure layers as well.
And how do you actually find founders to invest in? I mean, it's so early. Usually these companies barely have traction. You can't go off of anything. You are getting in usually at the earliest stage. So how do you usually find the individuals to invest in?
Yeah, candidly, I think it's really helpful to put out in the world what you do so that folks know how to find you as well. Like, I'd say Twitter's been amazing because if you constantly talk about parts of your thesis, like I'll tweet something about a part of fintech I think is screwed up, and I'll get DMs from founders like just leaving Stripe that are actually building that and they want to talk. So I think one is, that's obviously like probably less common because I don't always tweet about that. But, candidly, deal flow comes from a number of places. One, I try to be really proactive about the areas I'm excited about. So for example, if you're building in the supply chain manufacturing space or trying to build a new system of record or an ERP, I'll go really deep, know every player, and try to be proactive about like who's out there that might be building this, who's at a company in this space that might want to leave. Typically product managers, make great CEOs. So I try to stalk great companies and their talent and make sure I send a note and say, hey, if you're ever leaving, let's have a conversation. A lot of it are my founders referring their friends, other operators saying you have to talk to Nichole. So I try to get in as early as possible. And I think the way I'm usually positioned is, hey, before you go talk to a huge blue chip multi-stage firm, don't make your first pitch with those people. Spend time with Nichole. You can trust her. Figure out your round, figure out the business model, like what you're going to build, walk through things. And by the time I get to spend time with them that early before there's a process, I'm hopefully the first check-in. And I've had a lot of success with that. And those have been my best companies so far.
Wow. And how many first meetings are you saying yes to? Because I think I see being in venture, I spend my whole day in Zoom meetings. I am on a screen all day and it gets tiring. And one point I'm like, oh my God, I do not want to see another company. They're just, it's insane. So how do you decide which companies? Do you usually say yes to almost all first meetings, or how do you really pick and choose?
The beauty of having the first $5 million fund and not having a thesis, if you will, I sort of raised it and I knew a lot of my LPs well. So it was kind of like a test run and go have fun. I knew I was doing early stage, but I had no idea what. The beauty of that is that I took every single call, and I wouldn't call it a waste of time, but I realized where I shouldn't be spending time. Climate tech, space tech, I don't, so yeah, we'll see. But there were things, especially earlier, that are not my area of expertise. I'd argue in a lot of the climate tech area, you need a PhD or someone on your team that really understands these things. And so I spent a lot of time taking every call. Now that I've fine-tuned exactly where I plan to invest and focus and know exactly what I want Fund 2 to be, it's a lot easier for me to say that that's a waste of the founder's time to speak with me. And I get these a lot. I candidly probably only hop on the phone with one in every 10 deals I see. And a lot of that is because I just, and a lot of it is like off thesis, which, is a part of it, but I really try to make sure that I'm protecting my time and their time and I know what I'm looking for. There's some exceptions. Like I've taken some calls, just because I'm like kind of on the fence and like, I trust the person sending me the company, but then I end up, I've never done one of those deals. Like even if I end up taking the call, I've never done them. So no, I don't take them all. I also try not to meet with more than like 4 founders a day, new founders, first calls. Because to your point, it's a lot. I also want to be really thoughtful and I always like to prep. So I want to go into the call, have notes from the deck, understand who the team is, and try to be proactive. And it's hard to do that and stay organized and on top of everything. Because on top of that, I'm having second calls 4 times a day. And I'm also meeting other VCs 3 times a day. So having 15 calls is quite a bit. And that can't all be founders. That would be a lot.
Yeah, I mean, I'm definitely seeing that too. And what is your usual diligence process? Do you have something that you definitely kind of either have a checklist of items that you do step by step to really decide ultimately to make an investment, or what's your process like?
Yeah, it totally depends. I'd say like 95% of the deals I do, I feel like I'm prepped. Like I know, like certain parts of like fintech or financial services infrastructure extremely well so that I can go into a call really prepared. I'll know where they fit. Like, oh, okay, the other company is at the same stage. These founders are better. They're building in a similar way. Their business model is the same. But I have a great map personally for myself where like I keep track of like who exists in the space, where I think there are gaps are in what they're doing, and really try to benchmark them, against each other to see what makes sense. So typically what I try to do is one, like the founding team, for the most part, I've strayed on this twice. The founding team has to have operating experience at a startup, like a high growth startup. I don't believe, I certainly believe there are many founders that have figured this out with no tech experience. I will argue that it takes them longer and they raise and burn more capital figuring it out, where others are like, even if they've interned for 3 months, they've seen behind the machine, they've seen key hires that get made at a certain stage, they see what a product org looks and works like. They have a pulse on those things versus going into it blind and maybe taking an extra year to figure it out. So that's one thing just broadly that I look for. And, I think screening based on like only US based things like that, and then being able to benchmark, and also comps, right? Like, are there public companies? Is the TAM big enough? Like it should definitely be in the many billions, if not more. And, a few key questions I ask myself. One, will this company be around in 2 decades? Like is there a plan? Are they in a market that's big enough to build enough for that long? Those are a few examples.
Yeah, I love that. And then after you get off that first initial call, do you always have a second, a third call, talk to the other co-investors if there are any, like talk to other VC funds? Do you have other like, sector experts? What does that look like for you?
This has evolved. So, and more on the latter part around like other VCs and talking to them. So I always have at least 3 calls, and I want to meet usually it's not often that all the co-founders are on the first call, and I want to make sure I meet the team. So I make sure like the second call, we bring in more of the team. Between the first call and second call, I usually have some do outs for them. Like, well, I owe them a few intros. I send over a list of typically between 15 and like 25 questions that of just little stuff, big stuff, market, it could be a number of things. I want to meet the team, spend another hour. Because of COVID, that was when the first one was. I didn't get to meet everyone in person, but now I'm trying to do that. And then usually the third caller meeting is that. On the collaborating with VCs, it's interesting because it's tougher as you write bigger checks. So when I was writing a $250K check into like a $3 million round, like I wasn't, of course I talk, usually, I'd know who the lead was and we could text, but I didn't need, I don't need that signal, and half the portfolio I committed to before they had a lead or a term sheet. And in some cases, I'm helping them fill the round. So I'm helping introduce them to potential lead investors. Now that I am, writing bigger checks, and I had mentioned this to you before, but, just gave my first term sheet. There's no signal. I don't want to talk to anyone. I met this person through an operator. I want nothing. So I'm trying to get closer to first money in because I don't want a signal. I don't want to talk to other VCs. I don't want their opinion. Like, I don't want, anyone to taint because I want to be great at this and know that I'm great at this because of my own conviction and my own work, and not because, I'm following some, multi-stage firm, even if I respect them a lot. In order to lead deals and build an amazing firm, I've got to be first money in.
Yeah, and I want to ask you this because I think it's a big thing. I mean, being a first fund, do you feel like you have imposter syndrome sometimes? Like these companies you're holding now for 5 to 7 years, it's really hard to know. It's not like you're getting instant validation that you're doing things correct. So do you feel like you have imposter syndrome in this space of just like trying to prove yourself?
I think because I've gone against, like I've done deals other people didn't want to do, like definitely a handful of times. And I've heard all the reasons why it's not a good deal. And from firms I like deeply respect that have reputations and have put up great returns that are like proven at being good investors. I think where, sometimes I struggle is like because I've gone against deals that the big firms would do. And also to LPs, they want to know that you're co-investing with the best firms. And to me, I'm like, I've got to become the best firm by like separating myself. And so what I won't know for a while is if my conviction and the deals I'm doing that seem polarizing are great deals, or if it's shame on me. Like I don't know that yet. So I'm probably going to I'm going to be asking myself every day if I'm an idiot or not, probably for the next 5 years. And I just like have to be okay with that until things work out or don't work out.
Yeah, and that's why the LPs decide to invest in you. Like they obviously see something that's different than the big funds. So going into that, like how did you talked a little bit about how you raised your initial round of funding, but any advice you have for individuals looking to start a VC fund and where to start and how you networked and were able to grow a bigger fund eventually?
Yeah, so I'd say the majority of people that raise funds are spin-outs from VC firms and typically not operators. I think that's less common. I would definitely recommend, especially now that we're in a different market that we were, I was really lucky, right? Raising fund two compared to fund one and fund two being when the market crashed, night and day. And it should be, by the way, it should be hard. It should be hard if you are me and you have a 2-year track record, not 10. You haven't had a full around the world with a company where you invested at pre-seed and they went public. And you were in, you weren't hiding behind a firm. I think if you are someone like me who's trying to figure this out and you're not venture trained, I would highly recommend angel investing with funds that you can, starting small, showing numbers there. And I would also create allies with VCs. VCs are likely going to be your first money in your fund. They want your access, so you should be able to prove that you have that. They seem to care a little bit less about returns, but they want your deal flow. And honestly, that's great for you to get on the map. So I'd argue that bringing in other VC fund to funds, Foundation Capital, Bain Capital, Insight, they all have fund to funds. I'd recommend if you can get those checks, that's going to be the best kind of first money in to get you moving. And then as you prove yourself, you start to bring in a next fund, family offices, fund to funds, and other strong partners that care about returns. But I'd say start smaller. I think if you're venture backed, the world is different. Like typically your funds are bigger. Obviously, if you're doing growth, I definitely would say and caution everyone, it's not as glamorous as it seems. Like I love this and I signed up for hard work, but I think like everything is on your back. Like you are the brand, you have to build it. Like if I do something wrong, it's on me. I don't get to blame it on the firm I stand behind. The deal flow, I don't see every single deal. Like, if you're at these huge firms, you see every deal and you get to choose which one you want to do. And when you're starting out, you have to fight for every single thing that you do every single day, every dollar, like the back office you're managing. So I would definitely caution everyone that while it has been easy in the past to raise a fund, it is not anymore. Make sure it's something that you want and you want to work really hard and maybe not take a paycheck for a while. And yeah, if you want it, go for it and start building that track record. But, a little word of caution that it's not, this dream, situation that I think some people think it is.
So I know I asked you before, like what your favorite part of the job is. So what is your least favorite part about venture?
Fundraising. Like, I love people, but LPs, there's not a sense of urgency. Like if you're a startup and you're raising capital, it's not as, and I love the relationships that you build. I think there's, especially when you're getting started, like I want LPs that are in for returns, and a lot of what you get are LPs that just want your deal flow and they want to co-invest and take allocation in companies you're investing in. And I think there's some things that you have to put up with when getting started. And I realize that's what it takes. And I love the relationships. I just think fundraising and LP world is a lot different than what, VC startup world is like. It also takes a lot longer, and the process doesn't make a lot of sense, to be honest. So I'd say I don't enjoy that as much. I think it will be better as the firm grows, but I definitely don't enjoy that part.
Yeah, and we were talking about even before we started recording that it is really hard and like not to take every no so personally. It's like, okay, also the market's absolutely horrendous, but it's like you get no so many times, like even startups, like they hate raising money. It's not fun. So I could definitely agree with you there that it takes up way too much time, where I think both of us would rather be talking to companies and investing in different startups as opposed to just raising capital, and
Yes.
rather be deploying capital for sure.
I mean, I exist. They put me on the map. I exist for them. I want to put up great returns. I just think also and given where the market is right now, it's not a clear process. Like there's no like, hey, if you follow these 20 steps, you get here. It's like, kind of this, it's an inefficient black hole. Like it's like we need it and I love everyone, but it's definitely not the most efficient process.
Yeah. And I guess this goes a little bit off topic, but why do you think there's such a big gender gap in the venture ecosystem?
I would certainly say that it isn't for the lack of women wanting to be partners and wanting to write checks and wanting to be in venture, period. I still think, especially at these larger firms that have been around for, 10 plus years, I think they typically start out with men, and then they hire their best friends. And I think like then you've got all of these like kind of levels to get promoted through. And I think candidly, it still really like is hard for women. Like I've talked to several that I deeply respect that still aren't able to write checks, and they're slaves, at these firms for like 4 to 6 years. Their fear is like, if they leave, is it the same thing, right? Because if you go to another firm that's similar, is that process better? And I think we've seen a lot of that come to light. So I don't think it's that there's a lack of women or diverse managers interested in, investing or maybe raising their own funds. I just certainly think, and I have a lot of male VCs and mentors like literally tell me to not use gender as a crutch when I talk about like how hard fundraising has been, and like just ignore it and it goes away. And like I understand that argument, but like it's still real. Like it's still like definitely harder. Like, and I noticed that also like when I'm like when women pitch me, for example, and I always wonder like, is this what I do, where you have this like massive vision and that you're gonna like for me, I'm like billionaire by 40. I'm going to build something massive, help a ton of companies, absolutely crush it, and return a lot of capital to my LPs. But I feel weird saying that, and I think like guys don't hold back. And I also notice like this deal I'm doing right now, female founders. And I was like, well, what's the 10-year thing? And like, she's kind of sitting on herself. And I'm like, no, what is it? Like, give me the ego. Like, tell me what you're going to do. Like, give me the big vision. And she knew it and she had it, but she was like, well, it's like pretty big to say out loud. Like thought it was going to like turn me off from investing because her vision was too grand. And like, I think that's just, I don't know. I'd argue that's a gender thing. Like, I probably do that too. Like, oh, your ego's so big, or like, oh, you have an attitude. Like, I've gotten that my whole career, and I like, if you're a strong woman and want to build shit, you're going to get that, and that chirps at you, right? Like, ooh, don't have an attitude. Oh, is that too much? Like, oh, I don't know. And meanwhile, I'm like, hey, I want to be a billionaire and smash this with everybody involved, But I don't
It's so funny. Somebody just asked me recently how much money is enough, or like what'd be enough. I'm like, probably 100 mil. And I feel like as a woman, like they look at you kind of being like, oh, like, but like if a man said that, it's like, yeah, it's still, even like now this day and age, like it's just kind of, women are just looked at differently. And I would agree. And I also though point at women, and I think it's on us. Like I was saying, out of our 3,200 LPs in the syndicate, maybe 100 are women. Maybe. We just started a Slack channel. 3 out of the 110 people in the Slack that we opened up to are women. I went through every single person and I was like, all right, how many are women? Like, it's also women where I don't think they're getting into investing. I think it's still, they're a little bit more risk averse. They're not really into investing, or it's just like, they're not talking about it enough, which is actually why I started this. But it's kind of aggravating because like none of my friends angel invest, not one, who are women. I go to my men, I at least have 5 male friends who are. So I think
it's also like a culture thing. It's kind of like, and listen, all my best friends are guys, by the way. Like I love them all, and they're way smart. They're so awesome and smart and like amazing, and like, but there's definitely, it's kind of like this bro culture. It's like really sexy to talk finances and like really like sexy to talk about deals. And like some people, maybe I shouldn't say it's a gender thing. There's women that like that, but I think we have less of like these like little like chick clubs, if you will, where like we all like are in a group text talking about deals. And I actually, thinking about it, I don't really have any women I talk to deals about, like very few.
Yeah.
And that should change. And that's something that I should invest in. And I definitely think bringing other people into the fold. I think it's just viewed as this like male dominated thing that's like unsexy. And I think
Mhm.
more people, if they knew how it worked and felt comfortable with it, they would come in. But it's like, I never expected, so like on Twitter, it's kind of taken off in the last year. And I get a lot of DMs from women saying like, thank you for talking about this and for doing it. And and on the reverse side, I have like my buddy VC guys texting me saying, Nichole, you should take that tweet down. That was like a really hot take. Like maybe you shouldn't say that. You know what I mean? Like, and I'm like,
Yeah.
I can't win. Part of me is like, okay, great. It's controversial because I'm telling the truth. I'm like really encouraging women to one, like raise funds and like, like talk big about what you want to do. And then on the other hand, it's like, oh, that's too big, take it down. Or maybe LPs won't invest in you because of your Twitter and like all this shit. And I'm like, I can't win. So like my default is I want women to know I'm out here because I want them to be out here. And there's also women that are way more successful with far bigger funds that I deeply admire. But I think all of us should be talking about this so that people know that we exist.
Yeah, like we're here. And I just want women to step up and be more curious, invest more. Maybe it is, I would say 100% is also who I'm surrounding myself with. But at the end of the day, like just looking at our numbers alone, like there aren't enough women investing. And I'm excited to see the future where it is not as big of a gender gap. But for now, obviously, we're both still seeing it. But yeah, jumping back in. So, what are some recommendations that you make for individuals looking at raising a round of funding?
It depends. It totally depends on where they're starting. If they are a repeat founder or very, very like established in the space, if someone's like been the head of machine learning at like, some massive company, and they're going to do something in a similar space, like I would give them different advice. I also think they could probably skip the pre-seed, end up raising a little bit more capital at a higher valuation. And they also might already have design partners and get moving. So I think my advice for someone like that would be, yeah, raising a $3 to $4 million pre-seed makes sense. Taking 20% dilution probably makes sense. And I think, now is when to go to market. I think if you're someone that is building in a space you've never built in, or maybe wasn't a senior and haven't spent 10 years, like being a master at what you're doing, I'd probably recommend a pre-seed, especially if you're like, you kind of know what you're going to build, but you're not quite sure where you're going to land. I'd probably recommend raising between like $1 and $1.5 million. Like also if you're still finding your team, like your co-founder, I think it's really important to have a technical co-founder or first like founding member. If you're not technical. So a lot of it is like, make sure you're covering that base. And that's a huge priority. Again, some folks with more experience already know this and typically have a strong team. So that's different. If you're just also, I would talk to so many customers. That's for everybody. Don't ever get on the phone with an investor and try to raise capital. And if you haven't talked to at least 50 customers, like, I don't want to talk to you. Like, do your homework, know your customer, or figure out what the problem is, and then nail, are you enterprise, mid-market, or SMB? But like, at least know the world that you're trying to swim in. That's your job. You're building for other people, right? Like you're trying to solve pain points. So like if you haven't talked to a lot of customers, you need to go solve all that. But it's sort of high level, but it's a couple pieces of
No, I agree. I hear that sometimes where it's just like, no, I just know like there's a gap, there's a company similar and they've done really well. I'm like, that doesn't mean that you're going to do really well. Like you need to go talk to customers about your product and then actually try to acquire customers and get feedback. So I 100% agree with that as well. So what excites you about the current trends in the venture ecosystem?
Look, I candidly really like that the market's down and also that I'm this early in my career to see both the height of the last 2 years and then also right now and early. I firmly believe that the pullback from both VCs and LPs is really important for the ecosystem. I think a lot of companies that probably didn't need funding got funding, and largely because they're probably not even venture bets, right? Like that's not what venture should be for. And so I think that a lot of what's going on now with the market tightening is the opportunity for really exceptional talent. Again, the bar being really high to like the right people be put on the map. And equally, I think what's important for the ecosystem is that it's a lot harder as a VC to raise funds, and it should be. Not everyone should have a fund that they can deploy out of and put companies that probably don't need capital on the map. Like I think there was just like a lot of bloat, and I'm candidly really happy about that not being the case like anymore.
Now, are you still seeing crazy valuations? Because I'll tell you, first off, I'm seeing still insane valuations, and I could see it still going down in the near term.
Is that more Web3? I think Web3 is like out of like insane. Like I think anything over, 30 million is insane for a seed, but like definitely anywhere over that is nuts.
Yeah,
still
what are your
seeing,
numbers that you
I'm
usually
still
look for?
seeing, I'm still seeing in non, and you're going to meet my puppy right now.
I love it.
Not interrupting her, she's biting my ankle. So this is
Uh,
really my chief of staff. Um,
Stop. Best guest
so
on the girls'
she's
table by
amazing.
far.
She's ruining my life. So I would say for really, really amazing teams that have experience in the space they're building in at seed right now, no customers, but leaving a company and getting moving, I'm still seeing between 20 and 25 posts at seed. And then at pre-seed, I'm still seeing between like 10 and 15. Again, this is non-Web3,
Yeah.
but that's kind of still the range. It's certainly softened. Like last year, I was seeing like a lot of $40 million seed rounds, which is insane. So we're getting, it's still not normal. It's still really high, but at least it's better than it was.
Yeah. And what type of value do you bring to investors, and how do you usually fight for allocation and able to obtain that allocation for companies that you really like?
In founders, yeah. I mean, look, I think that the value is proven pretty early in building trust. Like when you get the luxury of having that first call with a founder before they've gone to market and anyone knows that they're raising, you get to build trust really quickly by saying, hey, I'm going to roll up my sleeves. I know what you're trying to do. Here's a couple areas where I think there are holes that we need to work on to get this right and also ready for a raise. And so having that luxury to build trust early, I tend to do that extremely well. And even in one call, like every founder has my cell phone number. Founders I've invested in, founders I haven't. I also never leave a call with a founder, even if I don't invest and don't help with something like an intro to a first customer, like someone they really might want to meet, like maybe they needed to, like, I just always try to do something, like however I can. And maybe if it doesn't scale, it does because I think it's a net good thing generally. But I think a lot of it is just building that trust, being really, really authentic, knowing what they need to do and being really upfront about that and then helping them get there. And by that point, I've won the allocation that I want. And also, I just candidly don't think there's a lot of good VC firms out there, to be honest with you. Like I don't feel like I'm competing with like a lot of quality in the market. I think there's like probably 5 firms at each stage that I deeply respect and think they're amazing at what they do. And so I lean in and I'm like, I deserve this allocation more than the other people at the table and I'm going to win it.
I love that. I love your confidence too. I think we need that. And I think it's true. Like I could just see it based on what you're saying, like how much value you bring. And I truly believe that you believe in networking and connecting people and bringing that value. And you just mentioned this a little bit, but who inspires you as an investor? And who do you look up to where you're like, hey, if I turn out like them, like everything's going to be okay?
I am like the biggest fan of Lee Fixel Edition. He was at Tiger for many years. He's been a great supporter of me and I feel lucky enough to know him. And I don't know that I've ever met anyone in the venture world that plays their own game, has more conviction in where they're investing, and that is totally off the radar in terms of where he's focused with the firm. Just like a dynamite human, a dynamite investor. And if I'm half of Lee in 15 years, I'd be really, really proud.
Awesome. And what is one final piece of advice you have for the listeners today?
Gosh, whatever you're doing, go for it. And it's definitely going to be harder right now than it was last year. But I'd say just keep going, go for it. And most people get what they dream about and what they want when they don't quit. So that would be my best advice.
All right, Nichole, thank you so much for joining the Girls Table today. If any of the listeners would like to connect with Nichole, please visit her Twitter. As I mentioned, she is absolutely crushing it. And Wischoff, but it has a C in it, but it is silent. Is there anywhere else that people could follow you today?
Thank you so much. That's perfect. Twitter's great or LinkedIn, but thank you so much. I really love this.
Thanks so much, Nichole. Appreciate it.
Yeah.